Okay, in this video we're going to learn how to write off accounts receivable. In the previous two videos we learned about setting up allowances for doubtful accounts. We learned the income statement method, and that's where you use a percentage of sales, and when you calculate that percentage of sales you're calculating a bad debt expense that goes into a bad debt expense journal entry. The next video, we learned the balance sheet method. In the balance sheet method, you take a percentage of accounts receivable, and it's usually based on an aging list of accounts receivable. This was a simple example. And what you calculate isn't the bad debt expense, but the ending balance of your allowance. Well, the reason we did that was because we said when a customer decides not to pay, we actually have to record our bad debt expense in the proper period. We can't wait for the customer not to pay. We have to make an estimate of our bad debt expense, and that's all due to the matching principle. Well, now we've said, okay, it's not enough to wait for the customer not to pay. We need to set up an allowance. Well, now in this third question, we're going to learn how to actually write off their account receivable when a customer actually doesn't pay us. So the question says, it's December 5th, 2012. XYZ company owes your company $2,000. You've been waiting for payment for over 7 months and have decided that you will never get the money and you want to write off this company's account receivable. Record the necessary journal entry. Okay, writing off accounts receivable is really easy, and it's especially easy if we understand the income statement method and the balance sheet method, how this works. So the first step of writing off an account receivable, and what I mean by write off is just get rid of, give up on. That's what we're saying when we write off. Like if you've ever been in a car accident and they say the car's a write-off, what they're saying is give up on that car. You're not going to repair the car. Goodbye, car. So what we're saying when we want to write off accounts receivable is goodbye accounts receivable. We want it gone. Well, how do I say goodbye to any asset? As an accountant, it's all about journal entries. How do I say goodbye to any asset? I credit that asset. So this XYZ company has a $2,000 accounts receivable. Well, we have an account receivable from them. So I'm going to get rid of it. I'm going to credit accounts receivable. And I might even note who it's from, XYZ Co. And it's for $2,000. And I'm just saying, look, we don't have a receivable anymore. Look, this isn't an asset to us. We're never getting that money. We got to get rid of it. So I credit my account receivable from XYZ company. Now the debit is tricky. It's actually not that tricky. The debit to write off an account receivable, you might think is bad debt expense because it's like a cost of having receivables. It's an expense. But no. We just went through that whole exercise to set up allowances for doubtful accounts. We said, sometimes customers don't pay. We need to set up an allowance in case they don't pay. Well, now they're not paying. Time to use up our allowance. So in the last couple of questions we said our allowance always ends up as a credit, so we're allowing for the fact in this other example that $15,400 worth of our customers won't pay, or worth of our accounts receivable aren't going to come in. Well, now we've said, hey, this account receivable isn't coming in. Let's use up some of that allowance. How do I use up part of the allowance? I debit it. So I'm going to debit my allowance for doubtful accounts. It's $2,000. I should have dated this. This is dated December 5th. That's when I decide to write them off. That's my debit, and there's my credit. So at this point, I've done a great job. Pat myself on the back. I've written off my allowance, written off my account receivable from XYZ company. So if you're ever in a scenario where you need to write off an account receivable, just know, credit the account receivable and you're halfway home, right? Just get rid of it. That's what write-off means. So get rid of that account receivable, credit that account receivable. The debit to write off accounts receivable, if your company's doing it the right way, is to debit allowance for doubtful accounts. You don't debit bad debt expense at this point. You have to wait and set up that allowance. So again, we don't debit bad debt expense when we write off an allowance for doubtful accounts. That's called direct write-off, and that goes against GAAP and IFRS and goes against the rules of accounting. Writing off accounts receivable is easy. Always this journal entry. Debit allowance, credit accounts receivable. Hope this video has been helpful for you, and good luck.